Hey everybody, welcome back. It is Wednesday, July 22nd, and today was the day everybody was waiting for. After the market closed, two of the biggest companies in the world, Google and Tesla, showed us their report cards for the last 3 months. And this was about more than just two stocks, because both companies are spending unbelievable amounts of money on AI. Tonight was the first real test of one question. Is all that spending actually paying off? Let's break it down. So first, the trading day itself. The market spent all day playing it relatively safe. Stocks drifted a little bit lower, nothing dramatic, just everyone quietly stepping back from the table. Tech stocks lagged a little bit. Small companies got hit the hardest and gold jumped. That's what nervous money looks like. Nobody wanted to make a big bet a few hours before two giant report cards dropped. The whole day was just basically a waiting room for 4 o'clock. But with that being said, you still could have made really good money today. I made really good money in the live room that I'm running. All the people that traded along with me made some really good money during the first hour of the day today. Just because the whole world is waiting for a couple of stocks to report, that doesn't mean you can't make good money other places looking elsewhere. And that's exactly what we did today. So on to the real reason why you're watching this video right now, Google and Tesla. Let's talk about those two. So Google went first, and the actual business crushed it. Wall Street expected them to bring in about $117 billion for the quarter. They brought in $119.8 billion, beating the target and growing 24% compared to this time last year. But the real star was Google Cloud. That's a part of Google that rents out computing power to other companies, and it's where the AI demand shows up. Wall Street said it needed to grow at least 70% to impress anybody. It grew 82%. That's not just passing the test, that's blowing the doors off of it. Even the ad business, Google's bread and butter, came in ahead of expectations. Google's CEO basically said the AI demand is so strong they can barely keep up. Now, here's where you need to think like a wolf and not like a headline reader. Google's profit per share printed at $9.11 when Wall Street expected around $2.90. Sounds insane, right? Triple the target? But slow down. Google owns pieces of two private companies, Anthropic and SpaceX, and those pieces went way up in value on paper this quarter. That paper gain gets counted as profit, even though Google didn't actually sell anything or earn that cash from running the business. Same thing happened last quarter. So the giant profit number is mostly an accounting illusion. The real story is simple. The actual business grew fast everywhere. So that means the stock ripped, right? Nope. It went down about 1% as of right now, me making this video. Of course, that might change by the time you watch this. But why did it fall slightly? Because Google was already priced like it would ace the test. And the one thing investors are scared of is the bill. Google plans to spend up to $190 billion this year building AI data centers. And of course, we all know how popular data centers are with everybody. And next year, it will be even bigger. So the market's real question isn't, are you growing? It's, how much is this costing us? And that answer will come on the conference call, which as of right now hasn't happened yet. So that remains to be seen. Now on to the co-main event, Tesla. Tesla was the opposite story, and that's a tale of two numbers. We already knew Tesla sold a record number of cars, 480,126 of them to be exact, up 25%, their best second quarter ever. So tonight's question was never, how many did you sell? It was, Did you actually make money on them? And here's what that answer was. The sales ended up being way ahead of the 26.3 billion expected. And that's great, right? But then came the profit number, 33 cents per share, when Wall Street wanted 50 cents per share. And that's obviously a big miss. Put those together and the story kind of writes itself. Tesla moved a record number of cars, but they sold more and kept less. Like a store having a massive blowout sale and the registers ringing all day long, but the profit margin got left on the floor. There was one genuinely good surprise though. Tesla is pouring money into robots, self-driving taxis, and AI. About 25 billion this year. And analysts feared they'd burn through more than $3.6 billion in cash this quarter doing it. They only burned about 1.1 billion. That's a much smaller hole than expected. They also said their Optimus robot is still on schedule for later on this year, and their robo-taxi service is now running in 7 major cities. The stock's first reaction was that it was down a little over 2% as of the filming of this, which again, that might change by the time you watch this, with a big conference call still ahead of us right now. What Musk ends up saying about the robo-taxi timeline will decide where this lands, especially since the top question shareholders submitted was basically, why do you keep missing your own robo-taxi deadlines? So here's tonight's takeaway. The crowd likes to trade the headline, but I usually like to trade the question that the market is actually asking. And what does that mean in this case? Well, Google posted a monster profit number, mostly fake. They beat everything that was real, and the stock still fell a little bit because the only question that mattered was, how big is the spending bill? Tesla beat sales by $2 billion, the headline chaser's dream, and the stock fell anyway because the question was never, how much did you sell? It was, how much did you keep? The 23 cents was the answer. So you've got 2 companies, 2 beats on the surface, 2 red stocks, at least as of the recording of this video right here. So it's the same lesson. Before any big event, write down the one number that will decide how the market will react. Not 5 numbers, 1. If you can't name it, you don't have a trade. You've got a lottery ticket. So tomorrow morning, both of these stocks will open at very different prices than they closed, and the whole market will react to what happened tonight. The options market on SPY and the NASDAQ will be wild at the open, so prepare for a lot of volatility right away in the first 5 to 10 minutes of the session tomorrow. Follow the rules, let the alligator indicator wake up, respect your levels, respect VWAP, don't chase on the first candle, let something substantial set up. Use discipline over dopamine. And that's the way I'm going to be trading it tomorrow and every day. Hope you all had a good day and have a good evening, and we'll see you back here again soon. Take care, everybody.